Hey everyone, welcome back to Corporate Decoder, where we uncover the juicy secrets hidden within financial reports. And let me tell you, this latest report from VistaOne L.P has some spicy details about how they are growing their business with some big money moves. Today we are diving into a Form 8K filing from VistaOne L.P, which is basically a company S way of telling the world about important events that investors need to know about right away. Think of it as a company S urgent bulletin board. This particular filing is all about how they been selling units of their partnership, and it tells us a lot about their growth strategy and how they revaluing their own company. VistaOne L.P is a limited partnership, which means it is structured a bit differently than a typical corporation. They are reporting on unregistered sales of equity securities, which essentially means they've been selling pieces of their company called units without going through the whole public offering process. This is usually done for private placements to sophisticated investors. The key date here is the 26th of September 2025, and the earliest event reported happened on the 1st of September 2025. This filing is a snapshot of recent financial activity. VistaOne L.P is the company in question. Now, they've been busy raising capital. In fact, as of the 1st of September 2025, they sold unregistered limited partnership units for an impressive sum of approximately $109.8 million. That is a lot of money, and it signals significant investor confidence in their operations and future prospects. When we look at the details of these sales, we see different classes of units being offered. They sold Class A B units, Class A I units, and Class A S units. Each of these classes has a different price and number of units sold. For example, they sold over 1 million Class A B units for more than $31 million. The Class A I units brought in the most money, with over $53 million raised from selling about 1.8 million units. And then there were the Class A S units, bringing in nearly $25 million. These weren't just random sales. The report says these units were sold to third-party investors and even an independent director. They also offered these units through a special entity called VistaOne L.P, which is designed to cater to investors with specific tax needs, like those who are tax-exempt or live outside the United States. This shows they are being strategic about who they bring into the partnership. Beyond these larger sales, they also sold Class E units to an employee of Vista Equity Partners Management, LLC, for $200,000. This looks like an incentive or part of an employee compensation package, which is a common practice. What is interesting here is that the exact number of units sold was finalized a bit later, on the 26th of September 2025, after they calculated something called the Fund S transactional net asset value, or transactional NAV. This transactional NAV is a really important concept for understanding how they revaluing their own units. It is basically the price at which they are willing to buy units back from investors or sell new units to them. The report gives us the transactional NAV per unit for different classes as of the 31st of August 2025. For example, Class AB units had a transactional NAV of $28.5 per unit, while Class A I units were valued slightly higher at $28.55. The Class E units, which we saw sold to the employee, had a higher transactional NAV of $29.37. So what does this all mean? VistaOne L.P is actively raising significant capital through private placements. This is a classic strategy for growth stage companies or investment funds looking to expand their portfolio or operations. The fact that they are selling different classes of units suggests they are trying to cater to different types of investors with varying risk appetites and return expectations. The calculations of transactional NAV are crucial because they determine the exact price of these transactions. It shows they are managing the fund very precisely. It is also noteworthy that as of the 31st of August 2025, several classes of units like Class B, D, I, R, S, and V were not outstanding. This could indicate that these are older classes that have been phased out, or perhaps they were never issued. The focus right now is clearly on the A and E classes. Finally, the filing includes Exhibit 99.1, which details this transactional net asset value as of the 31st of August 2025. This is likely where you find all the nitty-gritty calculations if you were a deep dive investor. The report is signed by Rohan Ranadiv, the Chief Financial Officer, on the 26th of September 2025. This confirms the information is officially sanctioned by the company S leadership. Now, let's look at the bigger picture here. VistaOne L.P is clearly in a growth phase, aggressively bringing in new funds from investors. Selling units like this is a strong signal. It means they have found profitable investment opportunities or are expanding their business in ways that excite investors enough to hand over substantial sums of money without the oversight of a public market. The pricing of these units, guided by the transactional NAV, suggests a sophisticated valuation process. They are not just selling units at any price, they are doing it based on an internal assessment of their value. One potential risk or area to watch is the nature of these unregistered sales. While they are exempt from public registration, this typically means they are sold to accredited investors who are assumed to be sophisticated enough to understand the risks. If there is a change in the market or their investments don't pan out as expected, these investors might face significant losses. However, the significant amount raised indicates a high level of trust from these sophisticated parties. The use of VistaOne L.P for specific investors also highlights a strategic approach to tax efficiency, which can be a powerful tool for maximizing returns for both the fund and its investors. On the flip side, relying on private offerings means less transparency for the general public compared to publicly traded companies. We have to piece together the story from these filings. In conclusion, VistaOne L.P is actively and successfully raising substantial capital through private placements of its partnership units. This suggests a healthy business with promising prospects and their strategic approach to investor classes and valuation, as evidenced by the transactional NAV, points to a well-managed operation. The key takeaway is their aggressive fundraising, which is a strong indicator of confidence and growth. What is your take on these fundraising numbers and VistaOne's strategy? Do you think this private approach is smart or risky? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more deep dives into the world of corporate finance. And don't forget to join our Discord community, linked in the description, for more exclusive discussions and insights. Thanks for watching, and I'll see you in the next episode of Corporate Decoder.